Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and we are continuing on our rebroadcast of the festivities from SilverFest. And of course, how can you have SilverFest without David Morgan, the silver guru, founder of the Morgan Report, who gave us a state of the silver market, kind of like the State of the Union, but state of the silver market address. It was right after my intro to SilverFest. And so here's what David Morgan had to say about where things stand now.
Can you hear me now?
Oh, wait. Yep, it's me. Yep. David?
Yep.
There you go. Thank you. See, David, that's the nice thing about silver investors. They can help someone who's muted one of the speakers. If we were at a treasury conference, we would have been sitting here confused for like 3 weeks. But fortunately, as you can all see, everybody, ladies and gentlemen, David Morgan, the silver guru, one of those key figures that were it not for David, would any of us be here? Would we know how to spell silver? Maybe in my opinion, the definition of an expert and someone who really stands for someone, not just hopping in when silver goes up, but the legend of the industry, the first person I think of when I hear the word silver, David Morgan, the silver guru. Welcome, sir, and thank you so much for being here.
Well, thank you very much for having me, and I hope I can live up to half of what you just said. But it is a fact. I've been interested in the silver market for a very long time. And it's also a fact that I think the first two people to start writing about silver on the internet were Ted Butler and myself, but there's all kinds of people now, which is great. It's helped me, and I never claimed to be a know-it-all. I've stated I'm a learn-it-all. I like to learn as much as possible, and there's still, probably details about the silver market I really don't know. But having said that, current state of the silver market, I think it's self-evident that there's been a big shift in the silver market. There's a huge amount of buying pressure in silver the last few months. Preceding that was a big dip in the silver market. So I pretty much, as anyone that's listened to me for more than a couple of videos knows, I usually refer to gold and silver because it's kind of hard to do silver alone. I could, but to put it in the context of gold. So first of all, most people are taught that gold moves opposite the dollar, and you can build a strong case for that. But if you look at it even deeper, gold moves opposite the stock market. So when you have rising stock market and rising gold prices, at some point they're going to diverge, and they're going to diverge rather strongly. Hasn't happened yet, but it's happening. And when we got this washout in March of this year and saw silver touch like the $12 level or something ridiculous. Gold had bottomed December 2015, and silver did as well. I thought that was the bottom for silver. I was wrong. But gold has made a series of higher lows all the way from that point till now. And it's already touched the 2,000 plus level. Silver, however, moved from the $12 level all the way up to 30 approximately. September was a big month. Everybody was talking about on the internet, possible default and that type of thing. I said, no, it's going to go into a consolidation pattern or a trading range, as it's usually referred to, which is what's happened. And I think that will continue for some time. So to give a little bit of history of where we're at, I want to go back to where we come from. The last few years where silver was 18 or less, sub 18, it hit 20 in 2016. So we could talk 2017, 18, 19, 4 years. There were not many buyers of silver. So the bullion banks are the buyers of last resort. And there was a huge amount of silver and gold that came into the Comex, especially the last year or so. And the warehouses, or the vaults as they're referred to, actually stockpiled a great deal. So the amount of the paper ratios on gold and silver, I have the math, but I'm not going to disrupt the screen and go off into my own land. So I'm doing it by memory, but we've heard the 100 to 1 and all that. It's very low now. So there's been a huge amount of deleveraging. I think this is the most important part I can talk about to the community, is that I think just looking at the registered only, silver's like sub 10 to 1 instead of 100 to 1. I think it's like 6, but I don't want to misquote it. I got the numbers from a friend of mine and I don't have them readily available. Probably on my phone. Maybe I could come in while I'm getting questions and find the message. Gold as well. So the leverage, so it's deleverage. And then about the default, and I've thought about this for years. In fact, I may have been one of the first ones. It probably wasn't one of the first. I wouldn't say I am the first, but one of the first to say, once the physical market takes over, that's it. And we may have to wait until that's the case before we really get a free price on silver and gold. And that may or may not be true. If the rules were followed and they weren't able to do so many sales versus what actually exists, you probably would have a more balanced market and probably would have true price discovery. But that's not the case now. However, the deleveraging I just mentioned is rather significant. The other part that most people don't think about is, wow, the open interest is really climbing like crazy. Well, when a dealer like, Miles Franklin, goldsilver.com, JM Bullion, Silver Doctors, and those are just retail dealers. And then when there's bigger, mass movement of silver for hedge funds, for example, all of that silver gets hedged. So it's like a double sale. You buy it, but the dealer is selling it, but he also sells it on the exchange. And why do they do that? Price protection. So if you sell $28 silver to a hedge fund, and they immediately go in. So if someone calls in, buys $28 silver from a dealer, that dealer immediately hedges at that price. So he's made a sale on the exchange. So when you see increasing open interest, it's not always, most of the time it is, but I want to be clear, it's not always that it's just, the bank shorting more silver as the price rises. It's that the price is rising due to buying pressure, and there's people that are hedging it because there's more demand for silver. So it's a little deeper than, let's say, some people think of. And so that's something to consider. And I don't like it. I mean, really, when you think about it, it's like a double sale. The dealer's selling physical, and at the same time, he's selling paper to hedge his position in case the person or entity that bought $28 silver reneges on the contract because they can't take a price loss. And this happens, especially in the retail market. It doesn't happen that often. A deal's a deal, but when you buy $28 silver and it's $25, a week later, and you haven't written the check yet, a lot of people, I didn't want to do, so this stuff happens. So that's why. I think the other part that I've just thought of recently is, the default. How does it happen? Is it going to happen? That's to be determined. And being very close to the palladium market when it defaulted in the early 2000s, basically went to a cash market. I think this could be the situation. And what that means is, as the silver prices go higher and higher, gold also, the margin gets increased. We already know that. But in the palladium market, the margin went to the cash market. In other words, you had no leverage whatsoever at all. You had to pay, if silver was $28 an ounce, use that number again, and you wanted 5,000 ounces, the margin was 28 times 5,000. So what's the point of being in the paper market? There isn't any. So that's something I'll just throw out there for people to consider. Backing up a little bit, when silver was around 18 or so at the beginning of the year, the supply-demand fundamentals were X. So the supply-demand was at a certain level. Now that silver's gone from 18 to 27, in all cases I can recall over the last decade, whenever you get an increase in silver prices, you start to see supply come back in the market. Not this time. That's huge. That's a huge, huge shift. I mean, there's just as much demand for silver at a $10 increase in price as there was at $10 less. So I'm very bullish, but probably not as much as some of your guests. I do think that it's a monumental shift in the whole financial system. Silver's a part of it. A portion of silver much more than gold. It's the poor man's gold. I don't like that terminology, but we get the idea. I don't think it's too bulky. I mean, everyone talks about, today that's about $1,000 worth of silver, Chris. And, that's about what my phone is in size. And, I defy anyone to tell me what they have in their house that's that size that's worth $1,000 besides their phone. Now, is it bulky relative to gold? Yeah, gold is a little more dense than silver. And it's the ratio, I don't even know the ratio right now, 77 to 1 or something. Regardless, relative to gold, you could say it's bulky. But let's do a thought experiment and say they're par, that an ounce of silver and an ounce of gold trade at the same price. Now, is it too bulky? So it's really not a function of its mass. It's a function of what its price is, excuse me, for its unit value. So I think I've gone far enough. There's a lot that we could go. One other part about the default thing. The real thing to look at, and everyone on this, it's going to be in here today knows this. I'm just reminding everybody, but you want to look for backwardation. I mean, that's really the sign that things are really, really tight. We didn't see that in the September contract. We saw a lot of stand for deliveries and then final notice days. And by the way, you can renege past final notice day, and I know that I've done it myself twice. So even though the final notice day is the numbers that people tabulate, excuse me again, I'm sorry, folks, that number is not necessarily the number. You can still, I'll use the word renege, I don't know the right word, but there is ways that if the other party's willing, you can buy it back or settle differently or whatever. And usually it's, paper, it's a check, it's a wire transfer. So just because you go even past final notice day doesn't exactly mean, I think it's a good number to use, but it's not the exact number. The other part of where it goes is really more difficult because we don't know what paper entities might be a subset, arm's length distance, and legally not part of the same company that metal is swapped back and forth with. I don't want to go too deep into this, but there's a lot to it. There's a lot to think about. We do want to watch it. We do want to be concerned, but we don't want to make it the main focus. If you look at gold, the amount of gold right now is about 50 million ounces. If every single contract was delivered upon, and we mine 96 million ounces. So from a 30,000 foot view, gold total represents 1/2 of an annual mine supply. So, if I was going to say, hey, are you allowed to hedge a year's worth of production? I said, yeah, I think that's kind of fair. I'm not trying to be wishy-washy or be an apologist for the futures markets. Believe me, everything written there is to the advantage of the shorts. Nonetheless, a fact is a fact. I didn't think about this until coming up for the show. And I thought, oh, how much are we talking about here? 50 million ounces, that's a little more gold than I've got. And I thought, but silver's different. Silver, as Ted Butler's pointed out many, many times, is like that elephant in the room. There's so much more in the paper markets than days or months of inventory. But still, it's not like it's 100 years worth of silver or anything like that. So there's that. I think questions are next because I'm kind of out of ammunition here, and I'm here for for everyone that's here. Thanks for my first words were going to be Chris Marcus. Thank you for having SilverFest 2020. Yara, thank you for all your behind the scenes work, and everyone else involved that I may not know on a personal level. It's really refreshing to see it. I know it's a lot of work. I've done similar things myself with a lot of help, and they're not easy. So thank you so much, and thanks for inviting me. If I got any time left, I'll take questions.
Sure, and thank you, David, for being here. We have over 2,000 people now signed up, and I'm guessing each one of them has been impacted in some way by the research and the study that you've done and shared. And if I may add to that, while, silver is great and this and that, it's been really exciting for me, getting to know you a bit more in the past couple of years, but also that I love when you talk about the metaphysics. I don't know if you caught, we did a morning yoga and meditation session, but I love that you also factor in, yes, silver is great. We want to make money, but there's something also to having it in context in life, and just the way we conduct ourselves and handle ourselves and treat people. You've been a role model to me. So it's really been a pleasure getting to know you. I have one question, and then folks, if anyone has a question for David, David, if you want to stick around, let's see, I know you are going to be talking about the COVID situation, some thoughts on the shutdown. So if you want to take a 15-minute break at 45 after the hour, you can. Although if you want to sit here and give away some silver with me, you can do that too. So folks, if you have questions, type them in. One question I have for you, David, you mentioned palladium, and it looks like the palladium deliveries on the Comex have spiked. I saw Rafi Farber, who the panel with recently, he was saying that basically standing for delivery is more like we've reached the point where it's more than what's in there. I know you know that situation a bit better than me. Curious if you see what you're seeing there.
On the silver market or on the palladium market?
Palladium.
Don't know. I haven't looked at the inventory of the palladium market, so I really don't know. What I do know is I've never understood why platinum and palladium even have futures contracts. They are such a small market. Silver is a small market.
Come on, David, the bankers need some basis points in those markets too.
That's it. It's all about making money from people that are constantly long and, ripping them off a lot. I'll use that word. I think it's appropriate. So I don't know, but it's very likely. I'll certainly say that. I just can't verify it. But that's happened. When we had the big palladium crisis, I'll call it, that happened in early 2000, and it went from the low hundreds to 1,100 an ounce. And gold at the time was, I think, only like 600. I'd have to look. But so once the default happened, the exchange went to basically cash only. And at the top of the market, if you wanted a paper contract, you had to have double the cash price. So nobody was in the futures market. And the LME had the bulk of it at the time. And the LME said, and I quote, I'm not going to quote, near quote, we, the exchange, will determine who gets the physical palladium and who has to, cough it up and get a lease rate behind it. So they actually, that old adage I've used a few times, possession is 9/10 of the law. Since they had it in their vault, they determined who had it and who was going to get it. And it did, work itself out over time, and everyone's kind of forgotten about it. But just to digress a bit, the whole thing happened when Ford Motor Company went from platinum in their catalytic converters for gas cars to palladium for gas cars. And they were going to save money because platinum was so much more costly than palladium at that time. So no one in the logistics department had any clue about the metals markets and phoned up and said, hey, send over this much palladium. And it wasn't there. So the price went absolutely bonkers. That's what took place.
Yeah. Well, I appreciate that. And David, the questions are coming in fast, but I'll take one particular one here because I guess that's probably what everybody would like to hear the most. Jared Cooper Band says, silver price targets. You can feel free to answer that in any way you like, but any sort of target or in any context that you'd like to discuss.
Sure. I'm on record in my first book, Get the Skinny on Silver Investing, which you can probably get for $1 off of Amazon. I think we only sold it for 10. It's a pretty small book. it's a primer on silver. I'm not saying you should buy it. It's been out of print for a long time. But in that book and other places on the internet, I said $100 silver. Way back in 2003, I think we were sub 5 or around 5. So you're looking at a 20 bagger. I still think that's going to happen. Could it go higher than that? Certainly it could. Will it? Remains to be determined. Is 100 going to be achieved or not? We have to determine. So that's in the context of the dollar still working, which it will, in my view. I mean, this idea, and I'm probably guilty, guilty of leading people to the idea that the dollar goes to absolute zero. It won't. There'll be a reset of the system before that, in my strong opinion. We're going to see a move to the Fed coin or, cashless society. So I don't want to dwell too much on the question. 100 is my minimum target without going to infinity, because there is a dollar at zero, which, again, I don't believe will happen. I think 150, 200, I think is stretching it. I'll be making my call real time. The 600 equaling $50 in 1980 is true from John Williams. I won't, it's a fact. But whether we get that high or not really depends on how much of a run to gold there is. And we're already seeing it with pension funds coming into the gold market. So, and Buffett coming into the gold market. So could we get like huge numbers? The answer is yes. Are we? Don't know. I'm conservative. Usually, like this year I was looking for, let's get over $20. Well, we've already hit 30. I still think this trading range is going to go for a while, folks. I may be wrong. I certainly am pretty good about saying, hey, I'm wrong. But I'm also pretty studied, and I'm right more than I'm wrong. That's also a fact. In fact, I've made every call on the top so far, almost to the day. Bottom calling, not so good. Consolidations, I'm pretty good at, and we're consolidating. So I over-answered the question, Chris. We have time for one more. It's past the time on my sheet, but I'll take it.
Well, we got all the time in the world. We got our own time machine here, David. You're the silver guru. It's SilverFest, so you get to do whatever you want. And, I think everyone's just excited you're here. I also appreciate the point you mentioned about whether the dollar will go to zero. And certainly I agree it won't, because, people are going to need something to put in their wheelbarrow to keep the wheelbarrow dry while they're trading that. So the dollar confetti that Jerome Powell has promised, it's going to have some value. Get your silver now. David, I have a question for you. Blue Horseshoe tells me that we have some new printed copies of the Silver Manifesto. Tell me it is so. Come on, David. Tell me. David.
Yeah, whether you're pro or against or neutral on China, it's the easiest place for me to get them printed. And I got the shipment just before this TV situation. So if you like to see my domicile, you get to see my office. But I've got 1,000 books printed. I think we've only sold a couple hundred so far. So we're going to be giving some away throughout this event for free, of course. And then if you don't win one, you want one, there's a website just for the book. It's called thesilvermanifesto.com. And we're selling them at whatever the price is, and shipping is moderate. I think the U.S. shipping just barely covers the actual shipping. Then we take a loss on shipping it overseas. But the problem with overseas shipping is it costs more than the book costs. So we kind of eat it on the shipping there, but we're willing to do it. We don't get that many overseas orders. So yes, it's back in print, and it's, I wrote it with Chris Marchese, so I think it's very valuable. You're paying me about 2 cents an hour for the amount of time put into that book, and but it's not for everybody. It's for people that are really into silver. It's not it's nothing like Get the Skinny on Silver Investing. It's not a casual primer. It dives pretty deep into the silver market. The chapter on silver manipulation is pretty well written. Tribute some to Gatta's work, the late great Adrian, forget his last name, and other things about bullion banking being a fractional reserve banking system, just like it is in the paper markets. There's a lot in it. Most people that are silver nuts love it. A few people that are casual observers of the silver market have given me negative feedback. Oh, it's a little complicated or whatever. So it kind of depends on the person. Far more positive than negative. You can read the reviews from Amazon. Most people that have bought it are pretty happy with it.
And I hear there's a chance people could win a free copy this weekend at SilverFest.
Absolutely. We're prepared to give them out free.
Yeah, well, Ken, I appreciate you sharing the link while I'm trying to stay focused here and not talk. And Ken M there shared the link for the Silver Manifesto, and I sure appreciate that. So Ken, you are the first winner of a copy of the Silver Manifesto. I'm going to write down Ken M. If you can email Yarra, Y-A-R-R-A, at arcadiaeconomics.com with your address so we can get that Silver Manifesto out to you. Thank you for doing that. And David, did you see Andrew Goman? Hopefully I'm pronouncing that close to correctly. Says, I'm manifesting free silver right now. Apparently he is, because Andrew, you are now the first recipient of what we will refer to throughout the weekend as the Silver Manifesto Big Silver Short and Silver Ounce Trifecta. Congratulations. You did manifest some free silver. And David, you're getting tons of comments here. Can you see the chat on your window there, David?
No, I've got chat, but let's see. It's just for us. I think it's Yara, me, and Jimmy Morrison are the only ones on this chat. So what do I need to do?
Well, there's a chat, and if you see there's the backstage, then there's a stage tab, an event tab. If you click on stage, that's people who are watching you live right now. And as we, I'll give you a couple minutes before you're starting the panel at the top of the hour on the COVID shutdown. So right. If you have perhaps a question of how did David Morgan get into silver, or maybe something fun like that, and we can pick a winner, and I'll toss in another free ounce of silver on that one too. Good question there, David, on the mind. Anything you'd like to ask folks?
Oh,
to find a good silver.
There's still tightness in the physical market, as we know, especially on the retail side, even in the commercial side, slightly. And I do think that it is going to contract somewhat. So unfortunately, and this may or may not be true, it happened in the crisis in 2008, where silver prices had this huge premium, but they didn't last very long. And people were obviously, some people willing to pay that premium, and then it narrowed and got back to normal. It isn't back to normal yet, but it's moving that direction. So there may be some people that have paid, these very high premiums for physical silver, and then, they wake up 6 months later and the premiums have fallen off. I don't know. It's very tight, obviously, but it is starting to calm down, let's say. So we'll just have to see what happens, pre-election, post-election, what the Fed does and everything else that adds fire to the silver price. But I wouldn't be too worried about it. I mean, if you paid a high premium, and a lot of people have, I think basis where silver is actually going to be, a year or 2 or 3 from now, I don't think it'll be a material change. But of course, everyone wants to buy at a low premium, but right now you can't. But it is coming down. So I think that's a comment I'd like to make.
Well, I appreciate that. And by the way, Miles Franklin is here, and they have their booth. If anybody does want silver or any precious metals, you're welcome to go in there. You will not be pressured there or anywhere at the conference, but just letting folks know that they are there. And David, we have Nick. I got to figure out how to say his last name there because my man is on fire here. Here's a joke for David. David, now that New York's in lockdown, what will the JP Morgan traders be doing?
Oh, I don't know. Sloppy Starbucks points.
Insider trading. So, Nick, there's another Kennedy half. You got a Kennedy hole at this point. David, if you want, I'm going to log off. And if you want to log off and take a couple minutes just to stretch or anything.
Don't mind. I'm going to turn off the camera and come back at 10 o'clock or, oh, that's only a few minutes. I'm going to take the screen off, get a cup of coffee. I'll come back and turn the camera back on. Is that all right?
That sounds fantastic. I'm going to do the same. And folks, we will see you back here in about 4 minutes. Again, welcome to SilverFest. Excited that you're all here. Come on in, have fun, and we will talk about the silver mining supply during the COVID shutdown in just a few minutes with David Morgan.